So how many of you all are comfortable interpreting a candlestick chart? So since you are experienced traders, I'm sure a lot of you all know how to read a candlestick chart. I'm not asking you to name candlestick patterns. So only thing that I'm asking is, do you know how to read open, high, low, close, range and body? That's what is required. So I hope everyone is comfortable with that. So those who are not, quickly we'll just go through those couple of slides. So over here, you have charts on different time frames. Monthly, weekly, daily. These are called end of day, after the day is over. Whereas the day is progressing, those are intraday time frames. 5 minutes, 15 minutes, 60 minutes, they are intraday charts. But irrespective whether you are looking at an end of day or an intraday chart, any candle is going to give you only 4 price points. Open, high, low and close. OH, LC. So in this illustration, you have one candle which is green in color, the other one is red. What is range? Range is the difference between the high price minus the low price. Irrespective whether it is green, whether it is red, always range calculation is high price of the candle minus the low price will tell you the range. The colored portion is the body of the candle. The colored portion, close minus opening price. Closing price minus opening price is the body of the candle. So why some candles are green and why some are red? Color is a function of where the candle closes with respect to opening price. In a green candlestick, open is lower, closing price is higher. So you have a green candle. In a red candle, open higher, close lower. That's why you have a red candle. So that's it. Beyond this, don't need to know any of those conventional candlestick pattern names. You need to know how to read the range, the body, that's it. So how do we identify these footprints now? So for this, we'll use a Japanese candlestick chart. So on your screen, you'll see few candles over here. So these red candles, what does it talk about supply and demand equation over here, friends? So who is more aggressive? Are the sellers aggressive? Are the buyers aggressive here in these candles? And do they look like big size candles, expanded range, or do they look like narrow range candles to you all? What do you all feel? Is it a expanded range candle series of expanded range candles or narrow range candles here? So clearly we have those big size candles indicating a lot of downward selling pressure. Price is making new lows. Every candle is closing lower, indicating a lot of downward selling pressure over here. So next, has anything changed now? In this set of 3 candles, any change over here? What change do you notice? Any significant change? Srinidhi says selling has reduced. Yeah, so a clear indication of loss of momentum in the downward selling pressure. Downward selling pressure has reduced, price kind of going sideways. It's basing there, it's going sideways. So in the sideways price action, what can you say about supply and demand equation? Are the buyers aggressive or the sellers aggressive? What do you all feel? Or is it a stage of indecision? So yes, Sachin, we say we don't know. It's a stage of indecision. We don't know whether the buyers are aggressive, sellers are aggressive. But yes, downward selling pressure has lost steam. Next, what happens from here? So let's put some numbers. Let's assume this consolidation is happening between the price range of 800 and 770 rupees. Now you have this huge green candle coming up, a strong rally in price, excellent follow through. So what does this indicate? So now there is a switch from indecision to clearly showing you that the buyers are aggressive. The buyers are buying aggressively. So friends, can you and me as retail traders create such a big move in price? Our buying activity, can it disturb price structure like this? No way. It is only because of institutional buying that you see this kind of huge green candle coming up. So when I say institutions, the common terms that you hear is the FII, the DII. So they are buying activities creating this move in price. So everyone agrees We cannot create such big candles. It's only because of institutional buying activity. So when institutions are buying, friends, they buy huge quantities. So when a mutual fund wants to buy, it will buy lakhs of shares. So someone who wants to buy lakhs of shares, is it possible that they will get their order at one single price? The way we retail traders trade, generally we'll put our order, buy so many shares at this price, and our order gets filled. But if institutions want to buy, impossible for them to buy everything at one single price. So they will follow the average pricing model where they try to buy at different prices so that they end up with a good average price. So they'll try to accumulate those shares. So let's assume, I'm just using numbers for understanding. Let's assume the institution had a mandate of buying 10 lakh shares. This is what their initial intention was. So within the range of 770 and 800, they managed to accumulate 2 lakh shares. But now if they keep bargaining the price, no more sellers there. So they realize that they have to buy aggressively, creating this huge rally in price. So assuming they accumulate further 4 lakh shares in this rally. So they started buying somewhere between 770, 800. Now price has gone beyond 900. So friends, will institutions indefinitely chase price? Will they keep buying at every higher price? If they indefinitely chase price, they are going to end up with a very, very bad average pricing. So they will halt their buying at a certain point. So they wanted to buy 10 lakhs, accumulated 6 lakhs. So what is pending here now? So there is a pending, or you can see unfilled order, unfilled demand of 4 lakh shares, not complete. So friend, next time when price comes back and hits the stack of pending orders, the moment it hits the pending orders over here, institutional buying activity is going to start. So what is price likely to do? Price that is falling down now is more likely to turn up. So our job as a supply demand trader is to identify this area of imbalance, wait for price to come back there and then take our action. Same thing on the opposing side. After a rally, some sideways basing, strong drop in price, big red candles, indicating some institutional selling activity. So same logic works there. Institutions can't sell everything at one go. If they do that, price will crash. So they will stagger their sell orders. So whenever price retraces back to this origin of the move, there is a high likelihood of having pending sell orders there. And when rising prices hit a stack of institutional supply, it is more likely to turn down. So our job as a supply demand trader is to identify these areas of imbalance and then take our action there. So the theory behind why a supply zone should work, why a demand zone should work. A demand zone is more likely to work because of pending institutional buy orders. Supply level more likely to work because of institutional sell orders. But is every rally and every decline institutional activity? So for this, we have to identify certain formations which depict institutional buying and selling. So we'll get to that.